Hi, this is Zach May with the Bulletin Board Heroes here at Zach's Traders Cafe for Tuesday, the 13th of May. Starting off with the FTSE 100, which is still within this somewhat irksome range between 8,500 and 8,600. I suppose we have had a false breakout to the upside yesterday when we managed to get up to the 8,600 plus area, but just below that now, and just below that resistance line there from March. End of day close above 8,600 is what we're looking for to give us not only 8,750, the late March resistance, but also maybe by the end of next month up to 9,000 and that green 1 year resistance line projection. On the downside, if we do break down below the 50-day line and the range floor at 8,500, there's the risk of a test of the 200-day line still rising. 83.60, RSI at 60, so at a good place still for further moves to the upside. Moving along to the DAX, where the record highs still above the old March resistance, just 23,500, that area, and looking for the top of the rising trend channel from April last year, as high as 24,300 during the course of the rest of this month. I suppose the most interesting market at the moment is the Dow, where we saw it gap to our initial target there, the 200-day moving average at 42,200. In fact, we exceeded it. That leaves the late March resistance there at 42,800, which is analogous to the FTSE 8750 zone, and then obviously after that we'll be looking for a return to the highs. But let's see how we do with the current situation above the 50-day line and above that February resistance line, 41,000. Looking for that late March peak, 42,800. Nice bouncing for the RSI, a couple of bounces there above the neutral 50 level, so that has worked, as has the overall pattern here of being a bear trap island reversal, fresh gap yesterday, adding to the one we saw at the end of last month. Moving on to Bitcoin, where it looked as though, or this time yesterday, that we were on our way to the dizzy heights, record highs, but we've managed to break back below the floor of the bull flag that we had there, 102,000. Below that, we've got the risk of retesting the initial May resistance at 98,000. That's somewhat disappointing and makes the chances of us hitting 120,000 by the end of this month that much less, but at least while we're above 98,000, prospect of 120,000 does seem quite imminent, 2 to 4 weeks, etc. On the downside, the worst case at the moment would be the 200-day line there at 92,000. Moving along to gold, and here the picture is of a market testing for support. 3201 was the old floor at the turn of the month, and that's sort of what we got yesterday, 3207, so slightly higher low there. Above that, still looking for progress within a rising trend channel, although we are to adjust it to according to the recent price action, but still the top of the channel there towards 3,800, and even if it's not this month, it could be by the end of next month. If you're cautious, then you're probably waiting for at least an end of day close back above the initial resistance of the week 3350 to happen. The other ominous sign is that the RSI has fallen below neutral 50, so that does suggest that an end of day close back below 3,200 will give us a test of the 50-day line, 3140. Moving along to pound dollar, where it looks as though the interest rate cut has maybe done for the idea of a break to the upside. So in the end, slight overshoot or triple overshoot of the top of that falling trend channel from the end of 2020, $1.33. We had a slight attempt to break higher, but it looks as though we'll have to test the 50-day line there at 130.80 before we make any progress on the upside. And obviously with the interest rate outlook at the moment, looks as though maybe a bit of a retracement is required. Moving on to the stocks, and starting off with an absolute winner, which 24 hours ago was rather lower than it is now. I think we were looking for the shares to did give us an end of day close above the gap. I think they were below that gap there, maybe in the 60s, and we were looking for up to a penny by the end of this month or even next month. Current situation is we've overshot the runway and actually filled the gap there which is what we were hoping would happen here as best case scenario target. End of day close now above the top of the gap, 1.25 pence. It will be required to give us a fresh leg to the upside. Resistance on the way down at 1.75 there from back in March. Upside valid while we hold above the 1 pence area, which was the initial target here, but very happy with that particular situation. Also happy with Borders and Southern, which seems to be reviving itself, making progress within that rising trend channel from back in August. I note that there are one or two very keen people on the stock, and above the 5.25 pence area, looking for 8.5 pence perhaps by the end of next month. I think I interviewed the company a month or two ago, and the shares are looking strong in the wake of that, which is quite reassuring. Bullish divergence in the RSI window as well, so an uptrend line there helping the cause, and I think the shares will start moving even more quickly once that 50-day line, which is already rising, starts to angle up a bit higher. Moving on to Catenai, one of the big back from the dead winners of 2025 so far. Here you can see that we're in this consolidation, basically finding support at old resistance, the old resistance in January around 0.4, and that's roughly where we're finding support. I suppose any dips towards 0.4 or just below, currently regarded as a buying opportunity ahead of a retest of 0.85 in the April resistance. RSI still above the neutral 50 level, even after all of this retracement, which is a positive sign and suggests that this is a buy on dips. On to Fragrant Prosperity with the boom in the shares provided by David Brown. Here you can see that unlike Catenai, we've actually found support well above old resistance. The old resistance at 0.65, new support 0.96, and above that, looking for a retest of recent resistance towards 2.2 pence. Ultimately looking for up to 2.8 pence by the end of next month, while we're above, or if we can stay above, 1.4 pence, our second target there. Haven't looked at Guardian Metal for a long time, and here you can see that after the pullback from the 50 pence level, we're back in business with the rising trend channel there, finding support well above the 200-day line and above the 50-day moving average at 38 pence, looking for a 50 pence plus target, hopefully by the end of next month or even sooner. We were spot on with the ITM power charting from Thursday, and here we had the gap higher through that resistance line, the falling trend channel there at 36 pence. Above that we were looking for up to 45 pence, and now we've upgraded it to as high as 56 pence by the end of next month. Ideally we stay on the right side of the top of the gap and the 200-day moving average in the meantime. We're really lucky we stay above the second target there, or the second target in terms of the triangle there, above 44 pence ahead of a move to the mid-50s. Moving along to Mosman, where the action remains very much in place. We're finding support above the latest gap there at 0.057. Above that, still looking for a retest of last year's resistance. In fact, a 0.08 plus target, hopefully by the end of this month, if we are lucky. Metals One continues to grind higher, and one of the stars of the year so far, as you can see from the performance, is 7x winner. Called higher from actually the low there around 2 pence with the bullish divergence that we had, and was never really looked back apart from one rug pull that we had from 30p to 10 pence, which I suppose would have shaken most people out. Current situation is that we got 33 pence as a former target, which is now support, and looking for 40 pence, hopefully over the next couple of weeks by the end of May. Moving on to Pantheon, where the rug was certainly pulled last month. Here you can see that the shares have regrouped with this neckline break through 36 pence. Above that, the initial target, the floor of the gap there at 42. Ideally, we get up to as high as 50 pence or 51 pence, the top of the gap there, by the end of this month, while we're above 36 pence. Moving on to a stock which is rather larger than something, well, the type of stock we normally look at, but too difficult to resist this one. It looks as though we had an overshoot on the downside for S32, and looking for the shares to hit the top of that rising trend channel over the next month or so, hopefully up to that 180 area by the end of June, while we're above the 137 price channel floor from last month. So let's see if the shares deliver the goods, especially after all these unfilled gaps to the upside that we've had in recent sessions. SWC is next, otherwise known as the Smarter Web, but as expected, despite the best attempts of crackpot psychotic bears, the shares have hit the top of the price channel there, 34 pence, and above 34 pence on an end-of-day close basis, looking for 45 pence, which is a resistance line projection from last week. So let's see if the shares deliver the goods. Looking very impressive indeed, and certainly giving a pie in the face to the naysayers. Sometimes you just have to go with the flow rather than trying to call the top or bring a stock down. Speaking of stocks which have been down, we got Shuka next, and here we've had a gap fill rebound. Nice hammer candle there on Friday. Looking for the top of the triangle here at 4.5 pence. Ideally, we get up to the 200-day line by the end of next month at 5 3/4, while we remain above that uptrend line from last month at 3 1/4 pence. On to a stock where the smart money seems to be getting very excited, and quite rightly so, given the way that the shares have now broken through the 200-day line at 0.12. Above that, we were previously looking for 0.2, which hopefully we'll get that over the next few sessions. If we're really lucky, we might even get it by the end of the day. Obviously, the main resistance here at 0.22, which was that brief spike at the end of December. But the upside certainly valid here while we're above that 0.12 200-day line. Now, the stock where the cognoscenti, or the alleged cognoscenti, seem to be excited is WeCap. Lots of trading, a lot of volume in the stock yesterday. I think I saw 18 million shares, which is quite amazing. In fact, what's more amazing, the shares haven't actually gone up given that kind of volume. But we need to see an end-of-day close above the 50-day moving average there, which is 0.92 on a mid-close basis. If you're fussy, above the already rising 200-day line at 1.02. Target here up to 1.8 pence, hopefully by the end of this month, but obviously want to give it up to the end of next month, given that this is not normally a fast mover. That's it from me today. More updates tomorrow.